Welcome to a new e-learning paradigm, AplusMap.ai.
Hey, Econ folks, welcome to The Explainer. All right, today we are going to tackle a concept that, let's be honest, trips up a ton of people. But it is absolutely essential if you want to understand how businesses really make decisions. We're talking about the difference between economic profit and accounting profit. So let's just jump right in with a question for you. Imagine you're running a little side hustle, maybe selling t-shirts or something. At the end of the month, you'll look in your cash box and there's an extra $100 in there. Is that $100 in profit? Your gut instinct is probably to say, heck yeah. But, well, the real answer is, it depends. It completely depends on which kind of profit we're talking about. Okay, so first up, let's talk about accounting profit. This is the one you're probably most familiar with. We can think of these as the costs you can literally see. And the formula for this? It's about as straightforward as it gets. Your accounting profit is simply your total revenue minus what we call your explicit costs. You know, it's the money you brought in minus the money you paid out. It's clean, it's simple, it's exactly what an accountant would calculate for you. So what exactly are these explicit costs? Well, think of it this way. If you had to physically pay for it with cash, a check, a credit card, it's an explicit cost. These are your direct out-of-pocket expenses. We're talking about things like, wages for your workers, the cost of materials, your rent payment, the utility bills, that ad you ran online. They're tangible, they show up on a bank statement, and they're super easy to track. But here's where economics really starts to differ from accounting, and honestly, where it gets super interesting. Now we need to think about the opportunity costs. These are the costs you can't see. So, when we calculate economic profit, the formula gets a really important update. We still start with our total revenue, but now we subtract both the explicit costs we just talked about and a whole new category called implicit costs. And believe me, adding in those implicit costs is a total game changer. So what in the world are implicit costs? Really, they're just another name for opportunity costs. It's all about what you gave up to run your business. For example, did you quit a job to start this venture? That salary you're no longer earning? That's an implicit cost. Did you invest your own savings instead of keeping it in a bank account earning interest? That foregone interest is an implicit cost. Or maybe you own the building you work out of. Well, you could have rented it out to someone else, right? That potential rent money is an implicit cost. It's the value of the next best thing you sacrificed. All right, theory is one thing, but let's make this crystal clear. We're going to run the numbers with a simple example and see how this all plays out in practice. So let's put some real numbers to this idea. Imagine for 1 month, your business brings in a total revenue of $1,000. Cool. Now, your explicit costs, we're talking wages, rent, materials, they add up to $900. And then we have our implicit costs. Let's say that's the $100 you gave up by not working your old part-time job this month. So implicit costs are $100. So first, let's do the easy one, accounting profit. We take that $1,000 in revenue, subtract the $900 in explicit costs, and bam, we get $100. An accountant would look at this and say, hey, you made $100 in profit, and you'd probably feel pretty good about that. But what about the economic profit? This is where it gets real. We take that same $1,000 in revenue, but now we subtract the total costs. That's the $900 in explicit costs plus the $100 in implicit costs. And what does that leave us with? A big fat zero. Do you see the difference? The accounting profit looked great at $100, but the economic profit? It's zero.
Now, I know what you're thinking. Zero? That sounds like I failed. But, and this is so important, in economics, an economic profit of zero is not failure. We actually have a special name for it. Normal profit. All it means is that your business is earning just enough money to cover all its direct costs and to cover your opportunity costs. You're doing just as well in this business as you would have been in your next best alternative. So you're not falling behind. It's actually a sustainable place to be.
So let's just recap the big differences here. Accounting profit? It completely ignores opportunity costs. That's why it's almost always the bigger number. Economic profit, on the other hand, includes those opportunity costs, which means it's always going to be less than or equal to your accounting profit. But here's the most important part. Economic profit answers the real strategic question. Is what I'm doing right now actually better than my next best option? Okay, so why are we spending so much time on this? Why does it matter? Well, for those of you prepping for the AP exam, this is not just some random trivia. This distinction is fundamental. You absolutely have to get this to understand how firms behave, especially in different market structures. So here are the big exam takeaways you need to burn into your brain. First, in a perfectly competitive market, in the long run, economic profit always gets driven down to zero. Always. Why?
Think about it. If firms are making a positive economic profit, they're doing better than their next best alternative, that's like a giant flashing sign saying, come make money here. New firms will rush in, supply goes up, prices fall, and poof, the profit disappears. The reverse is also true. If economic profit is negative, firms will start to leave. And, this is a big one, if you see a question on the test that says a firm is covering all its costs, they're trying to trick you. That phrase means economic profit is at least zero. It includes the opportunity cost.
Look, if you remember just one thing from this whole explainer, let it be this sentence. Accounting profit just tells you if there's cash left over. But economic profit, it tells you if you're making the right strategic decision. It tells you if this whole thing is actually worth your time compared to what else you could be doing. So I'm going to leave you with one final question to think about. An owner calculates her economic profit and it comes out to exactly zero. Should she panic and start looking for a new job? Or should she maybe crack open a celebratory beverage for a job well done? After today, I think you know the answer to that one. Thanks for watching The Explainer, and we'll see you next time.
We hope you're excited for what's next. For more learning materials, please visit aplusmap.ai.